Time now for Chart Attack, where we bring you a chart that will make you smarter. Jay Pelosky is with us, our closer, and stocks and inflation, typically they go together, but that's not been happening recently.
Right. If we look at the chart, Adam, I think it shows exactly that. Historically, inflation and stocks have kind of moved together. Makes sense. Inflation really helps earnings, right?
Yep.
Here, we have a situation where the stock market is really diverging from inflation. The number came out today. Inflation very low. Stocks still going higher. What explains that, and how does it come back together?
Bingo. That's certainly a red flag when you have inflation falling as it is, and you point out today CPI coming in 1.1%. That suggests there's not growth, and yet stocks continuing to move. So what's behind this discrepancy? Well,
it's the big debate going on with investors today is the tension between flow, i.e. central bank provided liquidity, and fundamentals. The flow has been the Fed, and then more recently the Bank of Japan, and the hope in the summer for the Bank of England, and then the European Central Bank in the fall. So more flow to come, stocks can go higher. The fundamentals are weak economic growth, lower commodity prices, strong trade-weighted dollar, all of that resulting in low inflation.
Right.
And therefore, when one looks at where the flow and fundamentals balance out, is it in stocks or is it in bonds? I actually think bonds, given this inflation outlook and the good numbers on the budget deficit, much better than expected. Bonds actually look like they're trading the opportunities fundamentally in bonds, yet the flow says it's in stocks, and that's the tension.
So I mean, the obvious question is who wins, but I guess it's a question of, well, when, right? Because in the next 6 months...
That's exactly what people are trying to figure out. You know, do I actually step in front of this flow-driven train of a stock market? You said at the opening segment, up like 14 or 15 days in a row.
Yeah, right.
How can you step in front of that? You can't. So people have gotten out of the way. That means the instability could be, I think, on both sides. Unstable to the upside, in other words, kind of a blow-off in the S&P up to maybe even 1,800. Who knows? Or the sell-off to the downside as that low inflation and trade-weighted dollar mean no top-line growth, and we have a big earnings disappointment coming up at one point in the next couple quarters.
And you said that you are long banks. Are you selling any of the banks? Or
I'm taking profits kind of across the board at this point. I think at this level where you look at the S&P on that kind of spike, I don't think we're up 15% year-to-date, and it's only May.
Right.
We're up 6% in the last month. To me, that's an opportunity to take profits in your winners. And where you want to be concentrated, I think, is where the flow and the fundamentals are supportive. That's places like Japan, U.S. spread product, things of that nature.